On the 2nd of July, Tesla told the market it had delivered 480,000 cars in 3 months. That was 74,000 more than Wall Street expected. A record quarter. 2 weeks later, 23 analysts published what they expected Tesla to have earned. $1.5 billion of operating profit. They already knew the delivery number when they wrote that. Tesla reported 398 million. They were wrong by 74%. And they were wrong in the direction nobody was looking. So this video answers one question. Where did the profit go? And I will show you what that means if you are thinking about putting money into this stock this month. First, the housekeeping. This is analysis, not advice. I am not telling you to buy or sell anything. I hold no direct position in Tesla or SpaceX. Like most people watching, I probably own a little of both inside index funds, without ever choosing either. Every figure here comes from Tesla's own filings, linked below. And that is exactly why this matters, even if you have never bought a single Tesla share. Tesla is one of the largest companies in the S&P 500. If you hold an index fund, you already own some of this. Here is the part that does not fit. Operating profit missed by $1.1 billion. But the headline earnings per share missed by 4 cents. Those two things should not be true at the same time. Reconciling them is the whole story. Tesla's operating businesses, the cars, the energy products, and the service centers earned $398 million in the quarter. In the same 3 months, interest on Tesla's own cash earned $422 million. The savings account out-earned the entire operating business. Then there is a line called Other Income. In the second quarter, it was $590 million. Add it up, take off the interest Tesla paid, and items with nothing to do with selling cars contributed about $930 million. Roughly 70% of profit before tax. The business you think you are buying contributed the other 30%. So what is inside that line? Tesla's own filing tells you. In the first half of this year, Tesla spent $2 billion buying shares in SpaceX. Elon Musk is chief executive of both companies, and SpaceX is not some unknowable private business. It floated on the NASDAQ in June at $135 a share. So there is a live market price, and Tesla marks its holding against it. That is the most defensible kind of valuation there is, and I want to be fair about that. But look at the size of it. Across those 6 months, the stake was marked up by $1,005 million. A $2 billion investment, carrying a $1 billion paper gain inside half a year. Everything Tesla's operations earned in the same 6 months was $1.3 billion. Now, I want to be careful, because this is where coverage overreaches. That gain was nearly canceled by other paper losses. $599 million on currency, $334 million on digital assets. Across the 6 months, other income netted out at just $55 million. So no, Tesla's profit did not come from SpaceX, and anyone telling you that is selling you something. But look at what it does tell you. The things that now move Tesla's reported profit around are marks on assets, not margins on cars. Let us go back to the operating business, because a 74% miss does not happen by accident. 3 things did it. 1. Margin. Analysts expected a gross margin of 19.5%. Tesla delivered 16.8%. On $28 billion of revenue, that gap alone is most of the miss. Record numbers of cars went out of the door at prices that did not carry the profit anyone expected. 2. Costs. Operating expenses went from just under $3 billion a year ago to $4.4 billion. That is up 47%. 3. The quiet one. Regulatory credits. Other car makers buy these from Tesla, and because there is almost nothing to build, nearly all of it drops through as profit. A year ago, they were $439 million. This quarter, $146. Nearly $300 million gone. And energy. the segment that was supposed to be the high-margin future. Revenue grew 12.5%. Gross profit fell 24%. And there is one more thing inside that energy number. In the second quarter, SpaceX bought $295 million of Megapack batteries from Tesla. That is about 9% of Tesla's entire energy revenue for the quarter, from a company run by the same person. To be clear, these are real batteries, sold to a real customer, and both companies disclose it properly. But if you own Tesla, understand that these two now touch each other's numbers in both directions. Tesla owns a piece of SpaceX. SpaceX buys from Tesla. And the same man runs both. If breakdowns like this are useful to you, a like is the thing that pushes it in front of other people who read filings. That is the entire ask, and we will move on. So what are you actually buying, and what might it pay you? Begin with something that never shows up in earnings per share. At the end of December, Tesla had 3,751,000,000 shares. By the end of June, 3,949,000,000. That is 198 million additional shares in half a year. Some of that is stock-based pay. Some of it is an acquisition Tesla paid for in its own shares. Either way, if you held Tesla through that period, your slice of the company shrank by just over 5%. You did nothing wrong. You simply own less of it. Start with what the price already assumes. Tesla closed at $362.86 on the 21st of August. That values the company at about $1.4 trillion. Tesla holds $43.5 billion in cash and short-term investments. Against that market value, the cash is about 3%. The other 97% of what you pay is expectation. Now, the near-term test, and it is checkable. Analysts still expect $5.5 billion of operating profit this year. In the first 6 months, Tesla produced $1.3 billion. So the second half has to deliver $4.2 billion. That is 3.1 times what the first half managed. That is not my forecast. That is simply what has to happen for the current consensus to be right. And you can check it yourself when Tesla reports the third quarter, expected on the 28th of October. Now, returns I am going to use the analysts' own delivery forecasts, so that we are not arguing about growth. They expect Tesla to deliver 2.6 million vehicles and 150 gigawatt hours of storage in 2030. From there, the margin and the multiple are mine, and you should argue with both. There are 3 outcomes on screen: cars and energy alone, robotaxis working modestly, and robotaxis working at full scale. Here is the part I did not expect. Even the version where robotaxis work at full scale on the analyst's own volumes returns about 7% a year, roughly what a global index fund has done historically, with one company's execution risk instead of thousands. That is not an argument that Tesla fails. It is an argument that a great deal of success is already in the price, which is a different thing and a more useful one. Now the other side, because you should not trust anyone who only argues one way. 3 reasons I could be wrong. First, people have called Tesla expensive for more than a decade and been wrong the whole way. A company can stay expensive for a very long time, and being early is indistinguishable from being wrong. Second, nothing in my scenarios includes Tesla's humanoid robot program, or energy growing faster than analysts expect, or Tesla licensing self-driving to other manufacturers. Any one of those changes the arithmetic. Third, and this is the honest one, if robo-taxis work at real scale, the margins stop looking like a car company and start looking like software. Software margins would break my model completely. So here is the test, and I would rather be checked than believed. When Tesla reports the third quarter, expected on the 28th of October, Look at two things. Did operating profit finally beat non-operating income? And did the second half move toward that 3.1 times number? If both go Tesla's way, this read is wrong, and I will say so. One last thing, straight out of what we found. SpaceX went public in June, partway through the quarter. In the 3 months to the end of June, it grew revenue 92%, lost $541 million, and spent $18 billion on capital expenditure in 90 days. That is the company sitting inside Tesla's profit line. It is the next video. Subscribe, and I will see you there. And again, this was analysis, not advice. Every figure came from Tesla's filings, and they are all linked below. Go and read them yourself.